Whoa, I'm way off center. Let me get centered. Welcome back, everybody. This has been quite a interesting earnings week so far. We had a couple of really nasty pullbacks all of a sudden out of nowhere. But then, were we expecting them? Yeah, kind of. And then there's themes that are sleeping and themes that are waking up. And then there's one that just keeps on chugging. So I'll kind of let you run off with that. If you had any theme names to throw in the chart, there's some good stuff to talk about.
Yeah, I mean, the thing, a couple things caught my interest today. Eaton Corp is an AI infrastructure play that I missed the breakout in September. I've been watching for a spot to buy it and just missed it. Today had an undercut rally at the 50-day. I'm guessing that's earnings related, but it could be just market weakness too. So I ended up adding it this morning.
There's a pretty nice liquidity zone right there, right at that 50-day. And it's in play right now, I think. If it holds this area, it's got a pretty good shot of running back to, hitting fib levels up here at about 344, 343. From there, if things start to trend, it's got some strength behind it. If you look at that weekly chart, this thing just climbs and climbs. Healthy pullback is pretty much on the table for this guy. I like it. Let's set some targets up real quick. I'm looking at support right around 320 to 324 pretty easily in this liquidity zone.
And 322 is the 50-day. So there you go.
So we're right in the middle. Everything aligns and everything agrees. All we got to do is wait for a signal. And then I'm going to put a target up here about 345 for the short term, medium term. And then we'll see if we get a little bit beyond that, because if this primary sets up like I think it will, this would be ideal consolidation range for probably the remainder of the year, and then probably into the new year this thing could really rip. Definitely keep an eye on this bad boy. Let's go into a 2-hour chart real quick here. Now we're definitely finding some buyers in that zone, and I think we'll probably get a quick scalp back to about 329 or 330 just today by looking at the volatility here. Let's see if we can sway that into a 5-minute chart maybe. There we go. Yeah, that kind of plays right out. There's a pivot right there. Bang, I'd say maybe look for a profit target short term of like 329.75 for this current, not quite a half back, but it's a good little bullish scalp going on now. And the channel break is already underway. As soon as it gets out of that, that's exactly where the target would be. I'm going to throw it way back here. Cool. Yeah, this is a great scalp target. First, we've got target 327.20. Just look at the wicks to the left. And then above that, we get an extension up to 329.75 pretty easily. This might be a good time to go long on this thing for some options, maybe.
That's what I did. I only buy options.
And that's, defined risk, and this is a good spot to be in, that bad boy. And as long as it holds, above the 50-day on the moving average side, you're good. It's right in this liquidity zone. I think we got a good trade idea here. We'll keep an eye on this one for sure.
I mean, I went out. I bought April calls.
Nice. Got some time on them.
Already up 0.82%.
Nice work.
Let's go.
And, if it starts approaching that 345, are you going to probably profit the whole position, or maybe flip some into calendar spreads or something?
Never know.
It's always fun. Options are great. I mean, you can go and adjust positions any way you want, and it really makes a difference when you're locking in profit along the way and you're still maintaining a position. It becomes a can't lose at that point. I love those can't lose plays. That's my bread and butter. Yeah. So can we discuss 0DTE volume crush? Yeah, it's pretty interesting. So every once in a while I'll have a day come up where I can go and sell an in the money put or call credit spread, and by the end of the day buy it back for like probably less than half what I sold it for. Occasionally, I'll hit a home run with that and have the whole thing expire out of the money and just dance and laugh and giggle all the way to the bank. That's pretty rare, though. About once in every, say, 20 or 30 times that I see a day set up like that, I'll get that. But it's also due to IV crush. So if it ends up kind of at the money, the IV will just knock off the short side of that, and then you absolutely kill it either way, even if it's still in the money. So when you're looking for implied volatility, it'll swing throughout the day as well, especially on the 0-day contracts. You'll see it bleed stupid fast on the opening, first hour of market time. If you went long on 0 days at the opening, it's suicide. Even if you're on the right side of the trade, it'll just diminish. It goes to zero pretty quick, or it goes against you. So if you wait till the afternoon to run into a 0-day play, if you hadn't opened a credit spread in the opening, and you're looking for a position that you want to scalp on the other side of it going into the closing, implied volatility spiking up, midday is your better entry point. It's lower risk that way, and even if you have it blow up in your face, if it's a spread, its risk is defined. It's usually pretty low. Pretty rare that I will sell a credit spread right on the open because we don't usually have direction unless we get a clean day like today. That would have been a great day to sell an in the money, call debit spread or call credit spread, and then just watch it melt, and then buy it back for nothing now. But it takes a little while to get used to the swing and volatility, and then with earnings, it's kind of the same scenario but on a longer time frame. So like your SPY and QQQ 0-day is going to be much more volatile, but if you look at earnings, it's the same thing. It's just in only particular days when you have earnings. If you're bold enough to sell credit spreads on a earnings play like that, it's not going to be a 0-day necessarily. Very few companies announce on a Friday, so you're kind of playing a bit of a gamble on that, being that you have enough time on that where it's not going to crush as fast as you think unless you're looking to sell direct. So like if you're selling a cash covered put looking to acquire a position, that's ideal because you get a really steep discount on your cost basis. But if you're looking to try and sell a spread on that, it's going to be a little less likely to be very profitable because you're going to find that the implied volatility is going to run that spread up to be too expensive unless you're selling it to open. But even then, you got to deal with legging out of it. It's a mess. So it's better to do that on the indexes. Look for ETFs, QQQ, SPY, occasionally TNA. Rarely you'll go with IWM on something like that, but it's all going to depend on situations too. If you've got a big news event or something like that. That's a lot of time. I could take a whole day and talk about making money on options, implied volatility crush, but we'll get into more of that.
Let me also kind of chime in with what I do, because I mean what I do is different. I like to do calendar spreads on 0 DTE, SPY puts and calls, where I'm looking for events that spike volatility, and I'll look to sell the high vol and buy a low vol. So obviously I'm watching the election. As we get closer, I'll do more, but I just did a double calendar this morning where I sold the 11.7s. Those are the highest implied volatility right now in the low 20s, and I bought the 11.15s, which were about 3% lower. Normally I want a better spread than that, but I also wanted to get involved just in case I don't see it.
Right.
But that's something I like to do, because again, I think we talked about this on Tuesday. I think you're going to have heightened volatility around the election, that that balloon is going to pop pretty quickly. So you want to be selling volatility, but you also want to be hedged. That's why I like the calendar spread.
And how long would you look to hold the long leg of that, or would you repeat calendar it if it didn't get assigned?
So what I do is unique. Normally on a calendar spread, when your short expires, you close out the whole spread. What I'll probably do is then instead of closing it out, I'll be selling 0 DTEs every day until my long comes due.
Gotcha. So you can hold it to basically to the last bridge burns, and then you can roll it out.
Basically. And you know, unless I get assigned, and if I get assigned, I'll just sell options against whatever I get assigned,
So,
and generate more income. So I don't care.
so I know there's two ways to do that. I mean, if you're wanting to be a little more risk averse and run a long, the long has to be at least 45 DT is typical. Some people will go with 30s depending on how much theta they're willing to eat, and it's pretty high theta on QQQ and SPY, so you got to be kind of nimble in this. But if you're looking at if you ran like a straddle, say you ran like a 45 DTE straddle, you could sell both sides of that, and it would be a little more risk averse. Although you're going to eat some time, you're going to make up for it probably within your second round of selling those 0 DTEs at least. So it would make sense to run it as a straddle on the long and then sell both sides. But you can go directionally because generally the market tends to melt its way up over the long term. So if you're on the bullish side of things, it tends to be a little bit more relaxed as far as risk. But puts are always more expensive for a reason. So it takes a bit more than just grabbing your long and instantly selling a short on it too. You got to kind of time it, so you got to leg it a little bit. So like let's say you grabbed your long at support and then price moved with you to where your long is now in profit. Selling the 0 DTE just locks in a large portion of that profit. So if you're swinging it with price action, it makes more sense. Add implied volatility on that, and that's where things really start to do better, because then you're selling 0 TTEs on the open with a self-hedging position on the long, and if you get a sign on, as long as you're out of the money enough to where you're covering your cost basis or your break even, you're good. So that makes sense too. And on a day like today where we had that massive pullback, it's ideal. I mean, we've been running this range for a while now, and we finally broke it this morning, and we went right to liquidity and bounced a couple times. Good options to be sold in there. And, we had this channel. That looks nasty. We trade the 1 minute chart, guys. There, it looks better. We know where this liquidity zone is, so like if we were to go and, take a like a long put in this range and then sell the 0 DTE put, maybe sell probably the 485 strike on the open there, or after that opening drop. Your long side would be in profit. You'd lock in some profit here, and then this would have melted it really quick. Buy it back, and you're done within less than an hour. And you can do it again tomorrow. I think we're going to bounce here, by the way. I think we might get a nice halfback play on this, back to like 487 and a half or so. And 487 is right where the middle of the two zones are. So Q's playing pretty nice today. We got a couple other names to go through, man. It's been a heck of a week trading stuff. And I'm thinking...
I mean, Lily is another one. I mean, I got my ass kicked on it yesterday. Obviously, it's a name I've liked, but I added this today. I mean, it held the 200-day yesterday. It tried it again today and held. So, I like the opportunity to get into this name cheaper.
It's one big wedge, and it didn't break down too far out of the angular here. I mean, it kind of almost made it back down to that 760 pivot, but then it found some buyers. And I think if we go to the 2 hour, we'll find a liquidity zone right there anyway. It's right in that range, right there. So we're looking for the halfback is right here. We're coming back to about 855. That's already underway and almost done. Thinking maybe we consolidate in this range here for a little while, and then we'll see if we can get a breakout play on this later. but it's looking like a good time to grab along if you haven't already. Let me
Yep.
put in a target for you guys. I'm going to borrow this pivot right here. It's pretty obvious where that gap is on the daily here. So short term, my self-proclaimed analyst target would be about 898. Pardon me 1 second, I got to sneeze. Oh, it went away. Cool. Allergies going nuts today.
That's good. Hopefully my dog doesn't hear it. He'll come up here and freak out. And like sneezes.
I had to take the risk management team and put them down for a nap. I've got them resting in their kennels right now, but mainly because they were a little rambunctious last time, and I'll take them for a nice long walk afterwards, I think. Anyway, what else we got going on here?
And NVO I'm watching. I loved how it performed yesterday. So yesterday it went down in sympathy with Lily and then popped. I mean, inside day to day, I'm not exactly sure what to make of it, but I haven't added to my position yet.
It got pretty close to hitting my my bearish target here. This was a user a while back posted a comment on our YouTube channel asking if we'd take a look at NVO, and at the time I was like, yeah, I'd be a little cautious. This was back in probably a couple 3 weeks ago, maybe a month ago. Time flies, man. Anyway, he was asking about it. I'm like, yeah, watch this zone. We're looking for a reversion trade. We nailed that target, and then we went even further south. We went down to this liquidity zone here, and it was pretty easy to break out. This is the ultimate pullback target here. Is like 105 and 3/4, 106, somewhere in that neighborhood. So if we're gonna keep an eye out for a time to buy, target that. But if it gets close and starts to find liquidity, like we get a nice long wick closed for the day yesterday, start looking at the 2-hour chart and plot that out as a little liquidity zone. But you can see it hit that target pretty much dead on in the pre-market yesterday and bounced like a red rubber ball right back to the other LZ. So if we get back above this little golden zone here, we're looking for a reciprocate trade back up to probably about 118 or so, 118 or 119. And that's basically just reversion of this previous trend here. Leg down, bounce, leg back right here. So if we're looking for a good long, this is a good time to grab this thing. And if you missed that that drop to that exact target yesterday, you still get a second chance today. This is looking like a nice little textbook double bottom. If we see a wedge here, it'd be even better because then we get some range. We can scalp a little bit in between. And then eventually this thing should turn into a nice little swing here. And let me see if I can figure out. Yeah, the other reciprocate or the other reversion trade is right here at about 124 and some change. There's a nice little gap to close there too. So if we get above this zone here, we could look for a long-term trade and get back to here. We'll make that my new self-proclaimed analyst bullish target for a reversion trade back to 124 and some change. Watch these zones here first, and short term I'd say 116, 117, good area to take some profit or take some risk off, and then wait for the consolidation in this range before we get to be too involved in this thing for a reversion trade. But it's so far set up pretty nice. And long term, this is all one big primary move in here. So if things start to find support in here, we may end up stacking another 1-for-1 and hit back into these ranges going into the new year. It's got some time to work out, but in the meantime, it's doing great. Doing exactly what we wanted it to. Kind of linking to that.
Last thing I got on my list is puts on the VIX exchange traded products. VIX is spiking today. It's testing kind of the September, October highs. The election is coming, so when I do puts on the VIX ETPs, depending on my mood, I'll either just buy the puts outright or I'll finance them with SPY call credit spreads. That way, if I'm wrong, I make money on the credit spread and hopefully offset my losses on the puts. Right now, I'm fully financed with the credit spreads just because the election is coming. But I would not be again, there will be a vol crush after the election, but VIX is up 13%. That's not, and we've talked about this before. VIX needs a reason to stay elevated. I think it'll stay above 20 because of the election. I don't know that it's going to stay up here.
Yeah. Current reversion target is an old reversion target back to 28 and some change. So I'm looking at a pretty good probability of that. 2-hour chart out. And we've made quite the parabolic move. We've seen this repeat over and over again. So I might see if I can grab a spread, like probably a 28-26 spread or 28-27 spread if I want to tighten it up. It might be a good time to grab that. Or you can just go straight outright puts. 28 strike looks pretty hot right now. I'm sure it's got lots of open interest today. Just looking at the reversion target, it's obvious. Everyone else sees it too. Yeah, that's
Yeah, and again, I prefer puts on the exchange traded products because of the contango.
right.
So they're structurally screwed up versus VIX, which is not.
Yeah, I like UVXY for that myself. It just seems to be the
I always look.
cheaper
You
play.
never know where you're going to find the liquidity. It's either going to be UVXY, UVIX, or VXX. Currently, I've got some VXX puts, and I just bought some UVXY today.
So you're probably looking for like a $55 target there. Right into a reversion. Cool, I'll paint that one white. I like to make my reversion targets really stand out. So it's either white or purple for me. Oh man, that's probably going to be a little more liquidity on VXX, come to think of it.
Yeah, you never really know. I check them all, and wherever I can find the best liquidity, I take.
When that bid-ask spread starts to tighten and you start to see the volume jump, that's where you want to be. And then open interest will play into that too. But you got to realize a large portion of the open interest on something like this is probably STO. So like, people got to write those contracts. That's where the open interest appears. Someone wrote that contract. And it could be part of a spread. It could be part of a hedge. It could be part of a collar. You just never know. There are ways to get that data, but you'd rather just play the volatility part of it and find volume, and that's where you want to be. So if you just look at the volume on the puts, probably looking for just off the top of my head, it'd be like December expiration at this point for a decent play with some time in it. And reasonably, there's definitely going to be resistance here at about $58. So I think that could be plenty of time to let this thing melt down. But usually when it melts down, it's fast. It's like the old adage, just stairs up and the window down or elevator down in some cases. But this was a window down moment here.
Yeah.
Plunk. And that's where you kind of you follow that heat strategy pretty well, and doing some teaching on that stuff too. And it makes sense because this can be a good edge and a hedge at the same time.
The long, yeah, I run long and short models on VIX. So right now I've got more long than I have short, which is great. Looks like, if the market closed today, our long models would all close out, and we would be adding to the short side, which dovetails with what what's in my head anyway. But yeah, so I love VIX calls as a hedge, and VIX exchange traded products. That's an edge because structurally with contango, they're designed to go to zero.
Right. So it's kind of the best of both worlds, and then you can lean on either side of it with volatility. So
Well, and then yeah, then if you can take a system, so I've got a system that's right 75 to 80% of the time on VIX puts. So add that edge to the edge that they're structurally broken. That's why I spend a lot of time trading the VIX stuff. I've got much better edges there than I do, in other things.
oh, absolutely. And if you find the edge of price action on it, so to speak. If you wanted to, you could run the calendar strategy on it pretty cheaply. Just be aware that that contango is going to get you. So be ready to roll and
Right.
be ahead of it
I mean,
because
I'm hoping one day there are some sort of VIX product, and I know there's something now on the futures that I can't access on Webull. I mean, they're probably futures options, which is why, but there'd be hopefully something zero DTE that that I can trade on Webull.
and you had some great news come out this morning, by the way, and I just got an alert that Nvidia's hitting support. Let's go to NVDX real quick.
Yeah, so NVDX, we're getting weeklies next week, Thursday. MSTU's on the watch list. So, I mean, hopefully with all the volatility there, we'll get weeklies. Yeah, NVDX is getting its ass kicked today.
I'm wearing my Pushing Premium shirt today. I can't wait to sell premium on NVDX. That is going to be a gold mine, I think. Even looking at the monthlies being like on average, if I can find a sweet spot in the bid-ask spread, I can compute that the monthly's natural yield is around 16%, which is pretty damn good for dollar on risk. And I'd like to think that the weeklies are going to be able to provide probably around, just to be conservative, around 10%. So you can actually leverage that into about almost a 25% yield in a month if you're rolling in and out of weeklies. That's why I'm excited about it. So it's like all of a sudden your yield per dollar of risk goes way up when you have weeklies come into play. That's why I've been waiting and waiting and waiting for those weeklies. Oh, I'm excited. That's going to be awesome.
Yeah, I mean, I'd love to buy some today. I don't like this chart. I mean, I think you buy dips in NVIDIA. I don't really like the chart right now.
Yeah, there's still a reversion in play. There's a support area right here. I marked an alert to go off right here at about 1640 on NVDX, but NVIDIA is going to show me basically the same thing. There's a liquidity zone here, and yes, we can see it hit a reversion target down here around. If I'm looking at NVDX, it would be about 1450 for a reversion trade. If it hits that, I'm definitely going to be in the right side of this thing to sell some puts. So hopefully it waits until Thursday to get there, and then we just get this absolute, I mean, perfect alignment of timing and opportunity to give us a good entry on NVDX for running a wheel trade. I can't wait. Also, I wanted to kind of point out a couple things. Your risk in NVDX for a wheel trade is way less than half of what you do for NVIDIA, and you get better premium because it's a 2x leveraged product. So I'm looking at yields that are at least double NVIDIA, which is awesome. And you get less exposure because it's going to be around $14 or $15 at that time. So your cost basis, if you're selling weekly expiration puts for $1 or more, let's say you sell the 14 strike for $1, your cost basis is $13. You're below that reversion trade threshold, and you can immediately, if you take assignment on something like that, cool, you immediately go and sell covered calls on it. I like to do a step further. I'll go straight up long equity. I'll sell an out of the money cash covered put and then sell a covered call immediately. So I'm making yield on both sides of the trade while it's playing in the middle. And that's if it hits that reversion target. So I could sell both sides. Same thing I've been doing with TNA, although I've been able to leg it one at a time or sometimes two at a time, depending on volatility. Same situation. Now, that takes a lot of capital. For those of you who want to take a very, very minimal risk into something and yet still be able to understand the process of wheel trading, there's one equity that Howard Greenberg pointed out to me a couple weeks ago that is perfect for that, by the way, and that is BITF. I think I mentioned it to you on Tuesday.
Yep.
This thing hit support today. I had a limit order that actually just got filled to sell next week's $2 puts at 20 cents a piece, which puts my cost basis down here to $1.80. And this thing is directly linked to Bitcoin. These guys farm Bitcoin. So I'm going to be in a position where I'm going to reduce my cost basis by 20 cents on a $2 stock. That's a 10% cost basis reduction in the first swing, first week of entry. I missed my entry last week. I'm getting it this time. So inside of 6 weeks, this is a very feasible stock to own for free inside of 6 weeks with that method. So I can take possession of shares. I'm going to probably put a buy order in here at about $1.92. That'll split my cost basis down between the put and the outright buying of shares, but then I can immediately sell a covered call on that as well and take advantage of that premium too, and just sell the edge. 250 call strike, go an extra week out if you need to get a dime or 15 cents for it. Same principle. You're reducing your cost basis rapidly on a $2 stock, and inside of 6 weeks it is absolutely feasible to own this for free. So I'm looking at this, getting excited. I've got some capital set aside for it, and then I'm also sandbagging my TNA position to go into NVDX with the same principle. I'm gonna take a bunch of the liquidity I had tied up in my TNA position to go into NVDX. That's my plan next week. So I'm loving the options income on that type of stuff, and this is one that I would highly recommend for people to practice to get used to the process on. Your total risk is less than $400 on this thing. I mean, it's a no-brainer. I'm going to start teaching with this one. This is better than Ford ever was. It's a great options test bed. And the wheel trade is lucrative. This is one way to get used to the process for just, I mean, pennies on the dollar for risk. This is nothing. You can sell, one contract on either side and be risking less than $400 on that to learn. That's ideal. Even if this goes to zero, your trader's tuition is paid and you're still going to get some premium for it. So why not? I've got a few others that I was going to revisit from last week. There's not a whole lot we're looking into for swing trades going into next week because we're going to have some kind of unpredictable price action, so to speak, going into next week, other than a few themes. But
more earnings and an election.
And yeah, there's that. So we did have on our nuclear theme. I mean, we had 3 out of the 4 names that we were really focused on return over 100%, and then one of them returned 200%, and that one was LTBR. Man, that was a psycho trade. So now we're looking for some contention here. We're going to see some profit taking. We're going to see some risk removing, and I'm looking for it to return about to the base of our measured move block here. So I'm looking for support around 850 for Light Bridge. And to name the others, we're looking at let's see here, SMR. Same scenario. We're looking for a return to about $18 for support. And what was the other one? God, we got so many of them. OKLO, same scenario, returning for about a move to $20 with OKLO. And what was the other one? Southern was a mention. I had it in the post, and I've lost track of the post. Bear with me a moment, I'll get it. There it is. SMR, ASPI, that's the one I was looking for.
Yeah, it's still up. That's up today. It's a beast.
And yeah, that thing just absolutely, tore off. That was one of the over 100%ers, and that was such a beautiful swing on that thing. We are going to have sore elbows, man, patting ourselves on the back for these call-outs, but that's what we do here on the watch list. We provide some absolute fish, and we also do a lot of teaching you how to fish. So stick around and call us. Don't call Kramer. I'm not going to dance around and hit buttons on a soundboard and yell things like buy, 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 or sell, sell, sell. Nah, we don't do that here. We have a sense of humanity rather than a sense of, well, we have a sense of humor too. It's just dark. But at any rate, yeah, we're done making fun of Kramer. It's kind of a no-brainer, but at the same time,
I don't think you're ever really done making fun of Kramer.
Okay, good point. We're done focusing on that.
We're done focusing on. But yeah, if I see something, I say something.
Yes, sir. And we don't have to dance. We don't let emotions get in the way. We just trade methodically like machines. We trade the chart. And the chart does not lie. It does not compromise. It just tells you how it is. And that's it. You get what you get. And when you focus on that chart instead of emotions and following some crazy man into a trade, you do well. Let's see here. MSTU on fire. And yes, let me go into MSTU real quick. By the way, hit support, hit that target, and bounced, of course. And now we're looking for possibly a nice bullish reversion back to like 85 and a half, maybe a little more short term. And I'm going to draw a box right on that 2-hour wick right there. I see you. Let's put that down. It's a reversion trade as well as a liquidity zone. And then from there, we'll make some decisions on our long term and medium term. But yeah, that was a hell of a...
I was hoping I'd get a nice dip this morning to get back in, and I didn't.
No!
But,
you missed it?
Interesting spot, though.
I mean, yesterday for that massive sell-off, people were panic selling it. I even grabbed a few at 61. Looking for some runs back into the liquidity zone, and you know it exceeded our $74.11 target. So dare I say that we may end up a little higher and go into like a $90 push, and that would be about where the fib level would take it. So I'm gonna boldly say my self-proclaimed analyst target for medium-term trade, if it goes above this liquidity zone, is about $90, 90 and a nickel. We'll call it that. So there you have it. My self-proclaimed analyst targets are in play, and MSTU is killing it. This thing is such a beast.
It is.
Looking for a couple other trades we're setting up here. Did Geo ever get in a good position? I mean, it hit that nice pullback. Didn't
Geo?
quite. Yeah, GEO you were talking about.
I bought a little bit. Actually, just now, I couldn't resist. I wonder why it's down 4% with DJT and CXW. And yeah, I mean, I haven't been paying attention to the news, but it seemed like that whole garbage comment helped Trump. So
Right?
I don't know. Let's see. I've been looking for a spot to get in ever since I missed the October rally. So I took a half a position in it as we were talking.
There's a nice little 5-minute inverse head and shoulders going on here. We're in the right shoulder side. There's your neckline, about $15.30. Reversion trade back to resistance at 1580 is pretty prominent here, just looking at the chart. Let's give this a couple more moments before we go in. And yeah, it's good to take a half position and wait for this a little bit. But there was a bigger part of the chart that we're missing here, and this is the wedge. And we pretty much made a run for that regression line, but we didn't breach the previous accumulation zone right here. So we found some liquidity, we found some buyers here, and I wouldn't be surprised to find this as a good support area. Just in moving the reversion line to here would be pretty easy. So let's just do that. Kind of, when I build a measured move, I tend to split the range of the consolidation point, and you can see there's a primary in play here. So as long as it holds this, and this is the reversion line of a wedge, so you can go and look left. It'll still play in the middle anyway, but if you look for your primary move being something like that, kind of go from middle to middle, stretch it out, and you get a half or whole move, and lo and behold, it plays right with the pivot that we broke today on that little dip, down from 1580, almost to the number. That's pretty cool. A move outside would be probably back to a fib or right to the angular here, so we would say about 1625 would be a good extension for this thing, and if it breaks out into a trend from there, that's where we break the wedge on the second impulse, which isn't all that far out of the norm, and we defeat what everybody else sees, which is a triple top. So if we get outside this angular and we start to break into the fib levels from the previous high, yeah, goodbye bears. Bulls are going to take this, and they tried to break it over here and they failed. So buyers came in and we're looking for a move a little higher, and let's say let's move this for a reversion. Looking at this trend here, I'll put my medium term to long term analyst target right on 1750. Conservatively 1740. How about that? I'll put my name on it. If this triple top fails, that's likely where we'll be, and it's kind of right in range with what everybody would look for in a reversion to the 86.6 fib level would be anyway. It all lines up right about there. If it gets beyond that, it's psycho, but look at this premium move right here on the primary. And if you were to split that off, it would take you to about 2190, just kind of eyeballing it, which is fib of this level. We'll see where it swings from here, but market structure's done its thing. This is where we'd expect the trend to begin. We marked it out. We've kind of come back into a nice pullback zone. Triple top looks to have failed so far. Take this with some skepticism. It can still breach this support level and go lower, but for now we're looking for a pretty decent entry point here. Take a soft entry, so to speak, or a half position like Matthew did here, and it looks pretty strong from now. I like it. So we already mentioned ETN. Did Baidu follow through? No, that kind of fell off this morning. So did Baba. Well, we're kind of looking at two other places here. Let me go to revisit here. So quickly, DJT we know sold off. Reversion target's pretty much out there at about 29 bucks. Everything's following into that. But let's look at one other place in a different sector. Where did my I was looking at shippers. I was looking at Zim. So far we've been pretty much on to the 1.5 move. We're right there today, and we're still looking pretty strong. $26 is the current target to break, and if we follow through with a full measured move, we could see this thing hit 28 bucks pretty nicely. And if you look at the weekly chart, that's about where we'd expect to find some liquidity or some profit taking in that area anyway. So far this shipper is just killing it in spite of the the volatility of the oceans being basically patrolled by pirates and a bunch of barbers, I guess. Are we looking at shippers breaking out, maybe being a decent theme later on, maybe into next year if certain amount of peace in that region is found? That's very possible. So it might end up being a one theme to look at as shippers. What's your take on that?
Let's see.
I wish there was. Is there an ETF for shippers?
There's not. Maybe there should be. Yeah, I'm looking at Zim. I mean, the time to buy Zim is when it's down. I don't know. Not my favorite here. You know what I really like, which I've been just looking at right now, is Robinhood.
Yeah, that was actually talked about yesterday in the Bullishbrs group. They had some news come out, and then all of a sudden, perfect 1-for-1 down is almost met, right? I mean, in the wick here, 22.98 was a full measured move from that sell-off into the close. But look back, there's a support zone here. So you thinking what I'm thinking? We're looking for a pretty much nice bounce play.
Yeah, I am.
And looking at the steps here, we basically hit, the 2-for-1 came back to support right in that area. So yeah, I'm thinking I got some crazy dope on this thing. I'm thinking we get a nice bounce back to like 25.50 pretty quick here, and maybe even beyond.
I just did a ratio spread on it.
Nice. Yeah, I'm liking Hood for the long term on this thing, and it's funny because you got I gotta wonder how many people are kind of following on. I'm not saying I'm the one who called it out first, but I'm sure some other people have the same idea that it's brilliant to be selling options on Robinhood. 3 cent per contract commissions. Yeah, I'll take more, please. And that's primarily where the bulk of my option selling occurs. It's in my Robinhood account that I still have, that I started with $5 not too long ago, back in the end of 2017. And that money has gone a long way and is now selling, premium on some big ticket items, so to speak. And I can't fault it for that because I mean they're, yes, of course, making money on order flow, and yes, of course, they're selling data and this and that. I don't care, dude. You give me 3 cent options, limit order is the rule. Sell my volume all you want. I don't care. You know.
We're actually we may do a 2x on this as well. That may be coming out within the next couple of weeks.
That'd be cool. And then if you look back, I mean, market structure, everything is trending here. So, that has all been followed through to the letter. And now we've got this nice, almost parabolic bullish trend that gave a beautiful pullback. And key support is right there at $23. Pretty obvious. Reversion target is still up here at like 34.20. I'll just mark all kinds of reversion targets here, long and short term. And in the meantime, I think getting half back of this quick pullback is pretty easy. And then from there, we looked back at I got this purple line up here. That's an old wolf wave that still was in perfect play. I mean, look at price hit those on the weeklies and the dailies just beautifully. Now we're looking for this broadening pattern break, hit the target, came back to support. This is where you have a previous resistance point that plays support. It's a pivot, and now we're bouncing back off of it. So likely to run back into the bull mode on this thing. Yeah, give me a 2x leveraged ETF on this, and eventually get that into weekly options. I'm down.
You may get your wish.
There was somebody a little while back that kind of asked me, and I think I'll say it's in a sector where there's something that could use some attention, and I'll give you some details after we're done with our broadcast. But it takes place in a sector that no one has any interest in an ETF in so far. So I'll talk to you about that. But if you look at some of the service industry stuff, like restaurants and stuff like that, I almost wonder if there's a theme there to find some interest as well. And we were looking at some of the other stuff like, dang it, what was Chipotle? I'm trying to remember the ticker.
CMG.
That's it. Why does that one take so long for me to come up with? It came into some recent volatility, and we're looking at the range holding true. It's pretty steady, but I wonder if anybody would consider, running not just like a services ETF, but I'll tell you where I'm going with this. I got to keep it private for now because there's some ideas here. But I'm kind of looking at an idea for running that as, if the consumer finds some sort of redemption with the outsized amounts of consumer debt, that's especially revolving consumer debt that's skyrocketed over the past 18 months or so, I got to wonder if there's going to be enough of a reduction in the Fed rate for everybody to go in and convert that debt into long-term stuff, like rolling it into an equity loan or taking care of that, which would mean that the staples sector would be good too, but going into services like or even into like cruise lines and stuff like that, I think there's kind of some room for redemption there. So maybe there's a few other themes that we should look at into next year. And yeah, the consumer is stretched right now. The revolvers are like at their limit. You've got everybody and their mother kind of grabbing at stuff because inflation has been so rampant. But what are the chances that kind of redeems itself next year? I think it's pretty high. And I think if we have
it could very well be
a strong leader, strong economy, and some peace brought into the world, there's a good chance of that. So Definitely keep an eye on that. That's going to be a center of attention for me. ETR was mentioned here in the chat.
What is it?
ETR. What is ETR?
Oh, geez.
Wow. That's a runner, baby.
Would have been good to buy yesterday.
No kidding. Holy smokes.
I guess it would have been good to buy at the open also.
That's an earnings play here going on. That's like damn near straight up parabolic and then some. I almost wonder if that's going to be a good one for a quick calendar spread or something. That's almost certain to pull back, but I could be wrong. Damn, Gina.
Yeah. These types of moves aren't my aren't my favorite.
No, I wouldn't want to chase it.
Yeah, from a risk standpoint, if this type of move fails, when it breaks the low. But right now the low is 15 points away. So it's like,
Yeah, I'd say a
10,
pullback.
10, stop. To have a stop, I mean, you'd put it under the low, like 12%. That's just, I don't like the risk reward for me on a move like this.
Yeah, that's like straight up parabolic. I wonder how many times it halted today. I would say
if this is an earnings move, I mean, there is solid research that companies that ramp on, or companies that have big moves on earnings tend to drift in that same direction.
true. Reasonably, I would say a pullback target would be right at 150. Ideally, it would give us a pullback and then resume trend, but probably mark that off. Yeah, day trading is one thing. I mean, you can go and day trade the crap out of something like this if you pick it up on a scanner or something. And if you looked at the after hours move from yesterday, I mean, yeah, it would have been a dead giveaway. Like, hey, volume just came out of nowhere. It was flat forever, instant volume, and then opening up right here at 140 and just ripping to 156 like that. That's parabolic as all get at, and you kind of want to make sure you're not chasing something like this higher. You want to look for key areas of support for, hopefully, if you missed the move, catch a pullback on that thing. And there's a couple areas you can see, just basic candles. Here's a spinner. If we close a doji here, which would be ideal, we'll probably get most of this bar back, and we'll see if we can catch a trend on this thing. But yeah, be careful if you're going to be trying to chase that as a long-term or swing trade. But if you're scalping it, dude, you might consider taking some risk off. That is one hell of a move. And all I can say about that, but yeah, that's one crazy move. Thank you for the call out on that. And then let's see, we got time for a couple more to go back into. I added SoFi and SQ a week and a half ago, and so far they're playing out pretty good. SoFi is one that I keep a close eye on. I have a few friends who basically bought the top of that thing some years ago, who made some income selling options on it. Hopefully they're back to a break-even point where they're in the game again and not sitting on a loss or holding bags. That being said, the pullback's been beautiful in this thing. Made that move back to like 980 range, ideal, and then bounced right back up for a full-on measured move, hit the target at 1140, backed off, and now we're consolidating. We're looking a bit like an M top here, so be careful. It can pull back, pretty quick to about 1060 or so. But if this thing breaks out of that range, look left. Market structure, guys. Pay attention to that. This is where a trend would be. We've already gotten that news out a couple weeks ago. We were looking for this to trend above the zone here, and it did. Now we're looking for some consolidation in this range. So range trades are profitable too, if you know what you're doing. And if this ends up being a wedge, and I assume it probably will be before it's an M top, let's start laying some lines out here. So take the expansion move. I like to ignore the wicks, but some people will include them. Other time frames, those wicks are candles anyway, so do what you will with it. But I like to pay attention to key areas. And if this thing is going to wedge and give us an opportunity for some range trading, this is where we're going to find it. So keep eyes on this thing. options chain's great in it. It makes decent premium. It makes a good wheel trade. It's pretty reasonable price for wheel trade, and this volatility is going to pay you some premium. So pay attention to this bad boy. But one thing to watch is, and I like to take this as a measure of qualifying a breakout. I'm going to leave this on the board. If we break above 1185, this thing should trend. If it can't break above 1185 and it starts to range here, watch out, because there'll be some short sellers trying to gap this back down to like, $9 or $10. So be nimble on this one, but watch this area. This thing could turn into a great long-term swing. And reversion targets are pretty obvious. You just look left. There she be, 1320.
There she blows.
What you looking at?
No, you said there she be. I said there she blows.
Gotcha. Sorry. I'm out of sync with our sense of humor, man. We've spent too long not picking on Kramer. We got to get back in the swing of things here. The other one I'm looking at is SQ, kind of another disruptor. It's not quite in the trend area yet, but it's getting there. And this is the theme that I'm watching, is the other side of finance. So when the big banks start eating crow, so to speak, I'm going to look for transactions still must occur. SQ has been a staple for small business for a long time now. And every little mom and pop shop you walk into, whether it's a little bagel shop or a tea shop or whatever you want to find, there's an SQ terminal sitting there. They call themselves Block now, but all the older ones say Square on them. They're still around. They're still making transactions on those. And all of that adds up, and growth is imminent. The small business owners actually finally seeing some light at the end of the tunnel if things go that way politically. Next year could be a boon for this guy. So SQ could really take advantage of that, along with PayPal and SoFi and a few other disruptors. When transactions leave the big banks, they go for the small banks. And you know what? Business makes the world go round, and small business owners know it. It's what's paying their bills. So pay attention to that sector. I think we're going to see some rotation finally follow through with some trends taking off. And so far, SoFi has kind of led the charge on that. It's a little overbought at the moment, just up in that parabolic range, but it's starting to trend there, and that's where I'd expect that consolidation to finally break out. And then looking at SQ, we already have a beautiful wedge here. It's ready. Give it time, let this flag work out, and eventually you're going to see some trend out of this thing. And if not, well, trade the range. We'll wait. We got patience, and sell some options in the meantime. Quick look at the chip sector, and we can call it.
All right.
AMD, man. I have a friend who scalped that little bounce on it yesterday, but now we're looking at follow through. So far, this thing's.
I don't like it. Nvidia's the play.
Yeah, Nvidia is definitely the play, but AMD is a great short still, and it broke through the half a measure move target. Remember when I laid this out? I painted them red. I'm serious. Looking for support right around 140. Maybe it'll be a buy then. But for now, we're short. I'm still short. I've got some put debit spreads that are just in serious profit right now. I took a little bit off yesterday, and I'm still holding on. I still have a little over 30 DTE, so I'm good on that. But in the meantime, this has been a beautiful short. It broke right through the danger zone and followed through with every step of the letter, man. Awesome play. Can it find support a little sooner, right around 140? Yeah, probably. I'll probably take the rest of my position apart right then. But measured move is pretty much on flow. It's perfect. Later on, if we find some buyers here, sure, we can go and hit that 183.90 target that I put up here, so long ago. But in the meantime, let's play short, keep profiting, and doing well with that. The other one we're looking at, Mr. Soft. Kind of a similar scenario, but not as dramatic. I didn't paint a bearish measured move on it, but that sell-off was pretty damn abundant for breaking liquidity zone, and I think we're going to hit the bottom of the box here around $400 pretty quick. So that's been a good short too. I didn't take a position on Mr. Soft for a short. I'm more or less waiting patiently for a long on it, but yeah, that sell-off was beautiful. And
Yeah, I may add to my long today. 408.17 was the October 8th low. It undercut and came back above. So yeah, I may add to my position today.
I can agree
But
with
again,
that.
I'm looking longer term. I'm not.
Oh, definitely. I'm just waiting patiently for my best opportunity to enter this thing. I've always been in and out of Microsoft. I think it's a great company. My kids own shares of Microsoft, and my whole thing was whenever they would go out and buy a new video game, they had to buy an equal amount of whatever stock or whatever company made it. A lot of their stuff is in Microsoft, so this is over years, and they've done well over the years because they started getting into that back when I was starting to trade back here in 2018, getting into that trend. So I mean they've been doing well, and I think they might have part of their college fund worked out with that because they bought a lot of video games. So hopefully, that pulls a nice triple out of this eventually. But in the meantime, yeah, this is the time to trade it a little bit, and this might be a good buying opportunity. It did have a nice bounce off that short-term liquidity zone, and I'm expecting maybe a little bit further down first as we go into election week and things start to play off in the earnings week as well. Things will start to move. So in the meantime, trade setup is there. We've done well on it. Any other stragglers to go on, or we're good?
I think we're good. Nothing else catching my eye.
I got one request to look at MSTR real quick. I will grant your wish, and then we'll sign off with that.
Yeah, just by MSTU.
Yep, pretty much. We're right at the support level.
This whole move, the 10-day has held, and it tested it today.
It's been beautiful. My pullback target has been met and then some, and 242.88 is what number I called out. That candle's about to close on that number, so yeah, it might be a good buy. Just be a little nimble with it. If it does smoke this level too far and breaks down below 240, well, take your risk off and reevaluate. But so far, we're holding. I think we could see this run back on up, and MSTU is the way to go on this thing for better exposure with lower dollars risk for the amount you put into MSTR. You could buy a whole lot more double X or 2X leverage. And there was an article yesterday. I think I sent you a link where there was a lot of people looking for more leverage on MSTU. I would say you probably had quite a bit of inflow yesterday, if I'm not mistaken.
No, yesterday was outflows. Today we're seeing inflows.
Good.
Well, I mean, they had earnings and people were sitting on massive profits. You kind of got to figure we're going to see outflows.
Give me weeklies
now
on
that. The
that.
earnings are over, we're seeing that money come back.
True. Get weekly options going on that bad boy, and we're on.
Yeah.
It's coming. Well, right on, guys. I'm going to go eat some lunch before I start getting weird. My brain starts to really fade around this time of day if I don't feed it. I've been skipping breakfast for the better part of a year now. It keeps my mind sharp, but man, that burns calories.
Intermittent fasting.
Yeah. I got to break that fast with something for lunch. Usually I try to eat by 11:30 if I can, but Tuesdays and Thursdays I've been, eating immediately after this. I've got some Chinese food in the fridge ready to go. So I'm starving. And yeah, feed your brain, give yourself a break, take your profit in the middle of the day and don't give it back to the market, and then maybe scalp some after hour or some power hour plays. But other than that, this is my lunchtime. I've made my sandwich by earning lots of profit and trading futures this morning. I'm going to keep it. And I'm going to go feed my brain and come back maybe into the close. So until then, I'll see you guys next week. We'll be back on Tuesday, tentatively. We do have a pretty packed schedule for stuff to look at on Tuesday, I think. And then by about Thursday, we might have some really killer call-outs to make.
Thursday, I will not be here. We're ringing the closing bell on Wednesday in Chicago.
Oh,
I'm
man.
going to be in Chicago, but Tuesday I'll be here.
Okay. I will see if I can have somebody fill in for you. I got a couple names in mind. In the meantime, if you have anything you guys want to request, shoot us a comment on the channel and we will gladly respond. Even if I've got to make a special edition and go through a watch list for you, I'm good. And we're here to help. Be sure to tell your friends and, of course, like and subscribe if you can, if you'd like to. But ideally, tell your friends because we're, like we say, we feel really good with the more people we can help. That's the reward we're after here. We're not here to sell a service for any means other than membership in the Bullishbrs community, but we're more or less here to help because we love to pay it forward. Our hearts are in the same place. We enjoy helping others to be able to find their success, giving a hand up, so to speak. That's what we're here for. So make us feel good. Tell your friends and get us out there. We need some exposure. Thanks, guys. See you next time.